Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. By the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting from the monthly time frame, the first thing that we clearly have to identify here on the monthly is that the market is currently in a range. We have the top of the range here and the bottom of the range here. We can notice, in fact, how the top has been acting as resistance and respected as resistance by the market already in multiple occasions, and at the same time the bottom has been respected as support and is currently acting as support in multiple occasions. And until the market will remain in between these two levels, we could simply expect more horizontal price action from a monthly standpoint on this pair. So on the monthly, the situation is quite clear. We have a range-bound market. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, it is quite easy to identify this area as a quite important structured zone. This area, in fact, is exactly the zone from which all this move to the upside started. Again, here, the market created a rejection to the upside away from this level. Then we had the break below that zone, and all this previous support was turned resistance here. And at the moment, the market is testing exactly this previous weekly support turned resistance. Now, until the market will remain below this level, it can easily be rejected to the downside. However, if the market wants to go and test the high of the range, it would need to break above this resistance. So only after a break above this resistance, this market can continue higher to the next resistance zone, which essentially at that point would be the high of the range that we have previously identified on the monthly time frame. So here on the weekly, this is a quite important key area. We can also notice that when it comes to the pattern, we have a very clear impulse to the downside followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area. So this is a quite strong weekly confluence of resistance area because we have the 0.618, 0.786 and previous support turned resistance area all lining up in the same area of price, which creates confluence of resistance. So a quite important level for this market. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, I did speak about USDCAD a couple of times in the past. I spoke about it when the market was around this area and I explained all the reasons for which we could expect this rejection lower. And then from here, I made another breakdown explaining all the reasons for which we could expect, in fact, this rejection to the upside, which again is exactly what the market just gave us. And by the way, I will link in description those two previous analyses so you can go and check them out for more free education. Now, before we continue with the analysis from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing. Now, first of all, let's check the data for the CAD. Now, what we can see here is that with the last reports in the long run, net positions have continued to getting increased from an institutional perspective. We went from having minus 70.4k net positions all the way up to minus 2.3k net positions. So we had a huge increase of the net positions, which makes the CAD stronger, with an extra 4,700 longs added with the last report and 1.2k shorts getting closed. So institutions have been longing the CAD aggressively, which makes USDCAD weaker. So moving back to the chart, what we can see? Well, if we can see that from a net positioning perspective, institutions are longing the CAD, which makes USDCAD weaker, we have to be very careful, because remember that also all the confluence of resistance that we have around this area is a zone that the market is currently trading below. The market is still trading below the area, and if from here we will see the continuation to the upside, that will essentially create a W formation from a daily perspective. And as I explained many times, after the creation of a W formation, there is a good probability to see a rejection lower for the completion of the W formation at the neckline, so the previous resistance turns support. Therefore, in a situation like this, if the market from here will go and test that confluence of resistance that is all around this area that we have previously identified on the weekly time frame, at that point there is a quite good probability to see a potential rejection to the downside away from that confluence of resistance that at that point would also complete the W formation that the market would be creating from a daily perspective. So if we will see a push higher into this confluence of resistance, what I would expect in a situation like that? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market will create this W formation, and we will see inside of this area, institutions continue to increase their net positions, therefore longing the CAD, which means shorting USD-CAD. At that point, I wouldn't be surprised to see a potential rejection to the downside, completing this W formation at the neckline. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.